Hey everyone, and welcome back to Living on Blockchain, the podcast where we dive deep into projects shaping the decentralized future. In today's deep dive, we are looking at a protocol that's flying a bit under the radar but doing something incredibly ambitious. Pair Protocol, and if you've ever wondered why it doesn't have more sophisticated trading strategies and traditional markets do, this particular episode is definitely for you. So let me talk a little about Pear Protocol. And it has a native integration into Hyperliquid, one of the fastest growing perpetuals exchange like we know it. What makes Pear interesting is that it's not just a copy paste text or another yield farm. It's building pair trading infrastructure on chain. That means enabling short and long trading strategies on particular asset pairs like ETH and BTC, Solana and Arbitrum, you name it, without really needing to write the custom strategies or build a hedge desk. So it's pretty much like pairs are already there, the strategy is already there, and you can just sort of play with it. It's like basically bringing hedge fund tools into the hands of everyday DeFi users. So let's talk a little about why does it matter. Pair trading is a market neutral strategy. It's not about predicting whether ETH will go up or down. It's about betting on the relative performance of ETH versus BTC, for example. Traditionally, only institutions or advanced traders with access to tools like interactive brokers or Bloomberg terminals could do this efficiently. Pair protocol changes that. By abstracting away the complexity, they let anyone run a pair trade with just a few clicks. No spreadsheets, no bots, just a clean user interface. So, how does this really work? Pair protocol sits as a middleware protocol between users and the perpetual decentralized exchange like Hyperliquid. You connect your wallet, you choose a pair you want to trade, say long ETH and short BTC, select margin and duration and slippage preferences. Pair handles order routing and execution both across both legs of the trade. Then trades are settled permissionlessly on chain. Think of it like Zapier for pair trading or uh, you know IFTTT. It kind of combines two separate perpetuals into one clean position. They currently support directional pairs, basis trades, and even synthetic long short baskets, all of them which are built on top of Hyperliquid. And all of this, by the way, is non custodial. So you get to keep your funds. Smart contracts do the work for you. So let's talk a little about their funding and their background. So Pear recently raised 4.1 million in a strategic round led by Castle Island Ventures with participation from Robot Ventures and other DeFi angels. Is anyone using it? Yes, and that is what is wild, and that is why we are actually talking about this. Pear has already clocked over $900 million in trading volume since launching. As of today, I think the daily volumes range between $5 to $8 million. That's not paper volume. These are real pair trades, not just farm and dump flows. They have also rolled out support for Telegram trade bots, browser wallet plugins, and are exploring integrations with more chains and pub platforms. So obviously, not all is smooth sailing, and you know that if you've been listening to any of these episodes. So some early users have flagged the lack of slippage analytics and minimal portfolio tooling. If you are running multiple pairs, it's hard to track P&L at a glance. P&L being profit and loss. Also, there is a learning curve. Obviously, a learning curve is there if you are not doing perpetual trading. Then my advice would be, my advice is always learn and do your own research before you get into something. But even there is another learning curve because not so much because of the user interface, because the user interface is definitely better than the other DeFi native alternatives, but it is still very intimidating. It's a little overwhelming per se for non-traders. Another concern is that pair trading isn't beginner friendly. Like I said, I think if it's something that you've not done before, then I would advise that you learn before you jump into it. Even with abstraction, pair trading are leverage trades across very volatile assets. So if users ape without understanding correlation decay or funding rate risks, they are going to get wrecked. Lastly, hyperliquid dependency. What happens if they change their API or fee structure? What happens to pair then? So, yes, lots of promise, but some very real edges to smooth over as well. Let's look at the big picture. Pear Protocol is a bet that crypto users want smarter trading tools, which I think is true, and they are not just looking at coins to gamble on. And with the rise of copy trading, Telegram bots, AI generated strategies, there is a clear path for Pair to become the backend infrastructure for intelligent crypto trading across chains. They are not building a casino, they are building the Bloomberg terminal for Degens season. So that is pretty much all that I had for this particular deep dive on Peer Protocol. If you like this format, please rate and subscribe. We will be dropping another episode today, and it's an interesting one with a wonderful guest. So do check that out as well. Until next time, stay curious, stay sovereign, and do share feedback with us as well if you have any. Until then, here's your host, Darusha, signing off.